Firestone Diamonds is one of just 3 junior kimberlite producers. We're talking now to the Chief Executive, Tim Wilkes. Welcome. You've just taken over, actually, as CEO of Firestone Diamonds. Is the company going to look any different under your control?
Well, I think it's going to look different for 2 reasons. Number one, we're actually on the cusp of become from a junior company to a junior producer. And that means that we're going to be a mining company. And my background is mining. So we are going to forge ahead with the discipline of a mining company. And we are building a very strong mining team to be able to do that.
Give us an update on your operations. I mean, you've had this first diamond sale, haven't you, 2011. I think you raised gross proceeds of just over $1.5 million, and you're expecting to increase production this year. As I say, give us an overview of the operations.
Well, currently, let's start with Kopane, which is our major asset in the Lesotho Highlands. And we've started the plant up there. The plant that we inherited in the Lesotho Highlands, we call it the satellite pilot plant, and that plant is now in full production at 1,000 tonnes a day, and on 32 carats per 100 tonnes, it's doing about 320 carats a day. We've got it to a level now where we believe we can sustain that. At the same time, we are building a new capital expansion front end for the plant. This will increase the throughput to 100 tonnes per hour, which will be about 1,600 tonnes a day. So obviously the grade and the carats will go up. But more importantly, we'll be able to mine the K5 and the K6 units in the southern part of the pit with this new wet front end to the plant. And the K5 and the K6 units at Kopane are actually higher grade than where we're currently mining. And they also historically contain the larger diamonds.
The figures you just given me there for Kopane dwarf those you're getting from BK11. Now, BK11 was your original project, wasn't it? But Kopane came to you with the purchase of Kopane diamonds last year. Yeah. Put the figures that you've got there into some sort of context, the sort of figures you were getting out of BK11, just to show the difference between the two.
The thing to look at is the margin per tonne. If you do the maths at Kopane, we've got $130 per carat, and we've got 32 carats per 100 tonnes. That gives us $44 per tonne revenue. On costs of around 20, that gives us $24 per tonne margin. The same figure for BK11 is between $7 and $10. So it's much more lucrative to actually spend a lot more time and effort at Kopane.
What's going to happen then to the BK11 project? You're not going to abandon that, presumably they'll continue.
BK11 has had 1 or 2 problems in terms of opening up removing the overburden and opening up the overburden. That did not allow us to selectively mine some of the softer material through the plant. We couldn't therefore liberate the diamonds. So we've had to do two things at BK11. We've had to introduce mobile crushers to secondary crush the kimberlite to increase liberation for the diamonds. And we've also had to use a mining contractor to strip more of the overburden away so we can get at the softer ore. We're definitely not going to close BK11 down, but we hope to be in a position in July where the grade increases due to liberation and the softer ore such that it becomes cash flow positive in July.
What are the main drivers then going forward now for you?
The main drivers going forward are actually to put tonnes through both plants, quality tonnes through both plants. The grades are there on both resources. And if we put quality tonnes through, we will recover the necessary diamonds. And the drivers are that the diamond market is absolutely cooking at the moment. And this is a great time to bring 2 projects into production and to continually to enhance production at those projects.
Well, that's an interesting point about the diamond market, because it's the rough diamond market that you're into, and that's where the prices have been rising. How confident are you that the prices are going to maintain at these levels?
Well, if you actually look at a graph, www do a graph, and the current rough prices are almost going up vertical. And of course there's a saying in all the commodity markets that what goes up must come down.
Sure.
But we're in totally uncharted waters with the diamond price. Diamond reserves are running out around the world, and diamond prices seem to go from strength to strength every month. I really don't know where it's going, but I don't see an end to the increases in the short term.
Why are shares at a 6-month low then? You've got Kopane now under your wing. BK11 is, as you say, humming. The Kopane project is going to produce what you have just said to us, tremendous margins. What do you say to shareholders that say, well, shares are at 6-month lows, why?
There's essentially a credibility gap. we have to demonstrate to our shareholders that we can produce these tons through our plants, we can produce these carats, we can put these diamonds on the market, we can get these dollar per carats, and if we get that, then I think that credibility gap will be closed. The Kopane shareholders that we inherited, they have had a number of years with disappointments and not achieving targets, and we were somewhat chastised when we bought Likabong because a lot of us shareholders believed we should have got BK11 into production first. But when you look at the index of how good Likabong is to BK11, I think once we start producing the short and medium term results over the next 6 to 9 months, I think we will close that credibility gap.
What do you say then to investors as to what sort of potential this represents? I mean, if you look actually at a note here from the broker Mirabeau, returning a buy recommendation to 64 pence, assuming that the diamonds should remain at these sort of levels. Clearly, they see a premium over the share price at the moment. What is your message to shareholders?
We have to demonstrate over the next 6 to 9 months, we have to expand number 1 plant at Likabong. We have to get those additional carats onto the market at increased prices, and then you will see the returns that Mirabeau are modelling in their numbers. That 64p, 64 or 84p a share equates to an MPV of about 250 million pounds. And if you run the MPV over 20 years life of mine, which is what we believe the open pit can run at Likabong, you can actually get that value for the company. But when that's 250 million pounds, our current market cap is 97 million. So the credibility gap is now over the next 6 months to prove that we can do that.
What are the opportunities out there, and what keeps you awake at night?
There are great opportunities out there right now because of where the diamond market is and where it's going, and I think there's a lot of money to be made. One of the biggest challenges going forward is going to be retaining people and attracting the right people to the operations. With that regard, I believe I have one of the strongest teams in the industry. I've been recruiting recently guys that have got a lot of experience in the diamond industry. It's a very, very strong team, and my biggest challenge is making sure they're happy, they're well remunerated, and we continue to grow the business.
Okay, Tim. All right. Thanks so much indeed. Tim Wilkes is the new Chief Executive of Firestone Diamonds. Thanks indeed for joining me.
Thank you.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.